Hello, everybody. Welcome to the ICT Forex trading stream from my Traders Lab. All right, so today is going to be a little bit special. I'm going to spend the first 10 minutes talking about what I currently think of the market, and then we will go into look for some trade setups that might form. Instead of trading the regular silver bullet today, we'll be mostly touching on minor crosses. What minor crosses mean is basically like forex pairs that do not involve the USD. Because as you know that today actually we don't really have much news other than the CPI report coming in from the British pound. And because of that, we don't really have much of a news driver, no volatility injection, and there's going to be a lack of news manipulation as well. So we won't really see much movement on the typical pairs, which are basically Euro USD and GBP USD. Alright, so the two pairs we'll be focusing on today will be the Aussie Japanese yen and the Aussie New Zealand dollar. Alright, so firstly, let's go through what I have on the screen here. Am I loud and clear? Can you guys hear me clearly? Just let me know in the chat. I know there's only three of you, and I would really appreciate it if we can get full interaction here. Can you guys hear me? Alright, if there's no response, I'm gonna take it as a yes. Alright, I'm gonna take it as a yes then. So what I have here in front of you guys is a report that came out last Friday. So last Friday they basically revised the CPI. All right. So let's go through this report together. All right. So U.S. stock market futures to session highs Friday after revised CPI data for 2023. So this is for the December CPI. So it showed that the pace of inflation actually cooled faster than previously reported in December. So this shows that the high interest rate is currently working, but I have no idea why the data can suddenly be revised like this. I've never really come across this before. So actually saw Euro USD and basically any pair with the USD behind spike up. And that is a rather strange occurrence for me. Not very used to seeing that around here. So the headline reading for December was revised to 0.2% from 0.3%. So we saw like a drop in the CPI data. So with a drop in CPI data, this suggests that there's lower inflation. And because there's lower inflation, it gives us the expectation, the retail market, it gives the retail market the expectation that rate cuts are going to be factored in earlier dates. So for example, the March in FOMC decision, the retail market is starting to expect rate cuts. All right, so this Friday news that came out of nowhere basically formulated a market opinion, just like that. Just one report like this is able to formulate the entire market sentiment. But what happened yesterday during CPI? We actually saw that CPI actually increased again. All right, it went from 0.2 to 0.3 again, which is basically the previous December's data. So this is seen as a 0.1% increase, which means that okay, uh, maybe the expectations were wrong because inflation is rising again. Even though we everyone thought that oh, it's actually going down, things are working. So this actually contradicted the market opinion, which was earlier rate cuts. So because of this sudden increase, this actually sort of aligned with what the Feds wanted in the first place, which was not to have rate cuts. Because again, may I remind that interest rate cuts only come in when the market is doing bad, when the economy is suffering. And right now, we're looking at US stock futures still being able to climb up all the way and a lot of speculations coming in. This tells us that, okay, the economy is still sustaining, it can still be stretched out further. All right, because if we do interest rate cuts now, the economy is just going to improve a lot without actually tackling the issue of inflation. So the issue of inflation will not be touched, and then inflation will continue to grow because when the U.S. economy grows, inflation will grow together with it. So if that root cause has not been solved, and we want to try to ease the current how do I put this? cooling factors. Yeah, I'm gonna call these cooling factors, all right, for the US rate cuts. And you want to bring in the cooling factors, then it just doesn't make sense. It doesn't add up at all. All right. So again, I'm still going on with my original bias, which is still higher dollar prices, because I don't expect an interest rate cut anytime soon. It's just unrealistic to me. And yeah, with that bias, we can basically look for lower prices for our foreign pairs, which are the pairs that we usually trade. All right. Any questions from you guys? Was that a clear explanation? Basically, to sum it up, it's just inflation actually rose back up, and this destroyed market opinion, and that's why we saw a dump in price. Alright, I'm gonna assume that there's no questions. I'm gonna move on. Alright, let's go to the charts now. Alright, so just ignore the positions that I have here. These are not accurate because I actually haven't entered anything. So I'm gonna play some music first. Let me just cue some music so it doesn't sound so dead here, yeah? Right, hopefully the music's not too loud. Let me know if it's too loud, right, guys? Okay, so the two pairs that I'm looking at today was actually the Aussie Japanese yen and the Aussie New Zealand dollar. So let me just bring this side by side. I actually called this out in the Discord, so if you haven't joined the Discord, be sure to join in, because I actually do give quite up-to-date analysis over there, and so far it's been rather accurate. Alright, so this one we're still waiting to hit the first target, which is this high over here, and the final target, which is this other swing high over here. So this is a play of internal range to external range liquidity. However, this fair value gap here you see here is still unfilled, so we might be able to see a retracement of such, tap into the fair value gap before heading towards the final target. This may probably come into play maybe tomorrow. It might come tomorrow, so I would advise you guys to mark your charts now, mark the levels. You never know when the fair value gap might be revisited, because on the 4 hour we actually have another fair value gap here. Alright, so price does not really have a reason to dip down into the 4 hour. It is more likely to take out the highs, but who knows, if you leave your order then it might get tagged into it. I don't think this is a reversal play because it doesn't make sense for the Aussie Japanese yen to go into a bearish momentum after this entire bullish leg here, and especially since we've respected this fair value gap on the daily time frame as well. So unless these targets are taken out, then this trade is still going to remain valid. So because this target has not been taken out yet, so we don't have to worry too much about it. Right, moving on to the Aussie New Zealand dollar. We actually have this 4 hour fair value gap here, which actually saw price respected it pretty well. Still waiting on the 3 hour close, so there's a lot of price movement that's still very possible. And what I'm wanting to see here is either a... Let's go on the daily time frame first. Yeah, on the daily it's just a wick. We're in a daily imbalance right here, and this giant wick down, which shows a lot of bearishness. So I'm expecting this 4 hour balanced price range to be unfolding. This is a very strong indicator of further bearishness. So if we can see a 15-minute imbalance, then I'll look to take a trade here. So I'm gonna type it out in case you guys did not catch me. Looking for M15 FVG to form. So once the 15-minute time frame fair value gap is formed, then we can probably take a trade, because we see a very nice rejection of this double coinciding point of interest here. So this is the play that I'm looking out for, and I've called out in my private signals channel as well. If you guys have not joined the Discord, be sure to join it. You can receive a lot of up-to-date announcements from there. Alright. Meanwhile, okay, I'm gonna set a limit here. I'm gonna set a alert here. So if price breaks this low, it's probably gonna receive a fair value gap. So this is in our current watch list, the Aussie New Zealand dollar. Aussie Japanese yen is still kind of just profiting, I guess. It's doing pretty well. I'm gonna do this side by side so it's easy to monitor. Ah, okay, this is easier to see. Are you guys able to see it? Let me check the stream. Yep, you're able to see it. Okay, good. I'm gonna change this to the Aussie New Zealand. And then we'll check the Euro USD. Again, like I mentioned, not a lot of price action moving into Euro USD because of the very huge down move, and we had a small little London expansion as well, which means that price is probably gonna chop around here, or it'll move during the PM session, which by then the stream wouldn't even be on. The reason why I'm not taking any inversion setup is because, well, there's too many liquidities being formed. You know, it's kind of hard to read what price is gonna do now. We might enter a bearish state here actually because of this breakaway candles here. Fill up. And the New York AM low is over here at around 1.07012. I'm honestly not too interested in the Euro USD. And as you guys know, I only play off the inversion fair value gap models here. So we're just gonna wait. If only I can somehow stream two screens, right? You guys have any questions you want to ask me, because feel free to ask me anything. I'm willing to go through any sort of fundamental analysis with you guys. Things you may be interested in, such as the commitment of traders' data, any type of data you want me to analyze, because I have knowledge in those as well. So just feel free, don't be shy, just let me know in the chat. Slow. I expect today to be a rather slow stream because, well, after all, it's Valentine's Day. And when it's Valentine's Day, you can't really expect much viewers to be here as well. It's kind of tough. So yeah, just realized something. You guys are not looking at the right chart. Alright, I'm gonna open up another. So I'm looking at the 3 minute on the Euro USD to get any potential scalps. Gonna see what's gonna happen here. It's creating off this breaker block here and then it's pumping up. We have a liquidity point over here to check out. It's pumping really hard. Actually, Mini Wubu gave a really good signal just now, but we did not get a fill, unfortunately. That is honestly a very good trade, but it is truly a shame that we didn't get it. Something, I think it was this. Yeah, it was this trade. And then we missed. He missed by 1 pip. Almost a sniper trade. Almost a sniper trade. Because I really see this liquidity point being taken out because of this entire huge imbalance here that I expect to at least get a fill. I expect this level here to be filled at least up to here. This old low here. So if you guys did not know that when an old low is paired up with a very big imbalance, you can actually see it as a liquidity void. So rather than see it as an entire fair value gap, like most ICT traders do, it is actually normal to see that the range of trade is actually from this old low all the way here. Oops, sorry. This is the range that we are looking at rather than the entire fair value gap candle that's marked out here, because we see this old low coinciding with this old high here. So this will be the range we are looking at. So I don't think price is going to reach up all the way. It's probably going to tap here and then continue the dump when it clears out this liquidity pool here. You know, if I don't get an entry by 10:30, I don't think there will be much trades going on already. The stream might be a short one, guys. It's really boring price action today. Yep, I'm just gonna ignore until this liquidity point is being hit. I'm gonna set another alert here in case it dumps down. So once it clears this liquidity, then I'll start looking for shorts on the Euro USD. For now, we're gonna observe the other pairs. So right now, let me check again. I'm gonna mark my stuff even better now. So this is a 1 hour inside a 4 hour FEG. And then just waiting on the rejection, because usually we'll tend to see an imbalanced form, but right now it's not really reacting that much. Let me check the GBP USD, because there was a announcement made at 11 o'clock. Not sure how that's gonna affect. Yeah, it's nothing much. What this time was this? 8 PM. Oh, that was a nice potential shot. Never mind. I don't really see anything right now, guys. Gonna take it slow. I think the good thing about... I think something that most traders don't practice is that you want to come into the market not expecting to take a trade at all. Just you're coming into the market to observe the market. And when it presents you an opportunity, then you take a trade. So that way you don't really feel that kind of FOMO. You won't really fear of missing out any trade. Just have no expectations of taking a trade, and then you should be fine. Your mind will probably be more calm when it comes to facing choppy price action. So imagine you want to take a trade here, and then you get scared, you sell here, and then you're just playing ping pong with the markets, and that's not really worth it in my opinion. It's not good for your capital as well, and it's also not good for your mental health, because my goodness, who is gonna be able to take that? So how's everyone doing on Valentine's Day, yeah? Oh, I realized something. I forgot to connect my live account to this trading view. Just give me a moment, guys. I'm gonna blur my screen. Personal details out there, I don't really want to show it. You guys can take a look at this browser real quick while I connect my Owenda account. Alright, connecting. Alright, I've connected my Owenda account. So the previous trade we actually hit break even. Thing is, we hit break even on the previous trade. So commissions took me out for like $50 or so, which is not much in comparison to 100k. Nothing much. GU, nothing much still. Man, it is a boring day. Alright, so I might schedule a live lesson soon because I want to show you guys a specific set of data that I'm very interested in. It's actually called the commitment of traders. So as you know that in the markets we see a lot of institutions buying early, right? You rarely see an institution trade fair value gaps or order blocks, you know, just like the way we see things, right? They are very fundamental based. I actually had the luxury of heading down to one of Singapore's banks to see how the Singapore bank trading flow operates. So how they operate is really based on fundamental predictions, their understanding of finance and the statistics given to them. They trade using this thing called the Bloomberg terminal. That means they receive news much faster than us, and they are able to really receive news based off a certain pair. So let's say they are looking at the euro dollar, right? Or they are looking at the DXY by itself, right? They are able to receive all the news related to the DXY filtered out for them. Whereas for us, we have to sift through all the fake news, you know, so CNN, Fox News, all those weird fake news stuff that is used to manipulate the common masses. So we don't have the luxury of having those kind of classified filtered out information like the banks do. So they use that information to do predictions on the market, and then they start to hedge their positions early, right? So in a downtrend, we can typically see the bank buy at this point here, buy at this point here, buy at this point here. So you rarely see commercial traders buying in at when the price is going higher, right? We see them buying when price is dipping and selling when price is going up, right? This is how they profit, all right? And this is how they really sort of make the markets. So because of that, there has to be a way for us to be able to identify when they're doing such programs, right? When are they buying and when are they selling? In a downtrend, how do we identify when do they buy, right? This is the hedging program that most commercial traders have, and I think I have the answer for that. Alright, I have the answer to how commercial traders trade and how you can identify when are they entering their hedge positions. Alright, this data is called the commitment of traders. So this commitment of traders will be something that I go through in the next live stream, preferably next week, Wednesday as well. If there is no big news, just stay tuned. The Discord, I'll update again. I think people are more interested in that than live trading here. For some reason, live trading used to be really popular, but price action these days have not been good at all. So on the Australian New Zealand dollar, price is still just chopping around this range here. This looks like an equal high, so I expect some form of sweep here. Okay, we might actually tackle into this higher time frame order block here, and then we might reject off of that. Let me check the higher time frame for it. Yeah, we can actually see this is an old low. Remember just now what I said? An old low coinciding with a fair value gap. This is the old low coinciding with a fair value gap. So on the 4 hour, yeah, that is the 4 hour old low. So So maybe price will actually tag into maybe 50% of this level and then reject off of it. This is a liquidity pool still. The longer price consolidates in a point of interest, the lower the trade probability gets. So yeah, I'm just gonna wait it out. I'm gonna set some alerts and maybe I'll go through something else with you guys. Otherwise, it's gonna be a really boring stream. Alright, let me set an alert here. Set an alert here. The old highs are taken out. What's my take on the commitment of traders, is it? Alright, so that is good. That's a good question. I was actually talking about it earlier on. Let me take out the data set for you. I think it's an indicator. So let me just indicator here. Then I can add it in. So COT is a specific set of data that you can actually get from a trading view itself. It's really easy. I can't remember what is it. Is it this? Let me check. No, it's not this one. So you can actually go to CFTC to get the commune of traders data, but I'd rather it be plotted out on the charts, so it's easier for me to explain. Is it this one? COT data, open interest. Alex punked. Could be this one. We're going to weekly. Just ignore the charts because it's really messy right now. And I'm trying to find a good COT data to inform you guys. Just give me a second, yeah. I used to have a really good indicator for the COT, but it's gone now. Is it this one? I think it could be this one, yeah. Alright, let me change it up. Market type futures. Okay, it doesn't give me the data at all. This is bad. Wow, I think they removed it. Oh wait, ICT commitment of traders. Oh nice. Okay. This is a good one. Commercial speculators net position 0. I'm gonna make it thicker a bit. Boxes line table inputs. Hedge 0 line. Okay, it's on. Hedge sell area is on. Hedge buy area is on. Okay, good. This one actually has everything. So custom look back. I think something is wrong with this custom look back. We are in the month of February, so that means we are supposed to look back for about 6 months. We're going to use the 6 months program here. So 6 months before February is, let me check. Let me double check if it's August. Yeah, 1, 2, 3, 4, 5, 6. Yes. Alright, so this is a good indicator by 2 degrees. This tells us the commitment of traders data. So in the commitment of traders data, there is a 0 line. Alright, and in this 0 line, it basically tells you that if commercial traders are in a net buy position or a net short position. So usually how retail traders look at the data is, if this red line, which is the commercial traders, which are banks and institutions, if they are above this 0 line here, then okay, they should be buying into the market as well. But what they do not realize is that if data was so easy to read, then everyone will be rich. So what is the secret behind reading what the COT has to tell us? Alright, so we're currently looking at a 6-month look back. Your maximum look back should be a 12-month look back. So that means if you're February now, you should look back all the way to February. You determine the high and low of the range. So let's say right now we are currently below the 0 line, right? That means commercials are in a net short position. And it's pretty obvious because we are going in a downtrend for the foreign pairs for many months. So this line here indicates the 6-month mark. So we look back at the 6-month mark. We'll take the highest point and the lowest point. So this point here from the 6-month mark and this point here, and we'll split it into two, which this indicator has kindly done for us. So what this means is, this is how you really determine whether the commercials are buying or selling, alright? If they are below the 0 line, alright, and they are in this discounted area here, then this is where like the stars sort of align and we are in a net short position, like a really net short position. That means all the commercials are selling because this is like we're in a discount of a discount. So it's a deep discount. Does that make sense to you? That's just step number 1. Am I clear in whatever I've been explaining? If any questions, you can just ask me, alright? Just treat this like a one-on-one lesson. All clear? If there's no reply, I'm gonna assume that. Oh, okay. Let me explain again, alright? Okay, so this line is to tell whether the commercials, which are banks and institutions, whether they are long in the market or they're short in the market. A lot of retail traders mistake this 0 line to be the thing to tell whether they are long or short, but actually it's not. While this 0 line says that they are in a net long position, and then for when price dips below this 0 line, they are in a net short position. Alright, so that's number 1. Factor number 1 is that the red line, the net interest, has to be below the 0 line. The second factor is that you have to look back on the data 6 months ago and 1 year ago. So this line here demarcates the 6-month mark. Alright, you will take the highest and the lowest point of the 6-month mark, which is one is currently now, and this is 14 August, and you will split it into two. You will divide the data into two, so like this green part and the red part. So if you are in a net short position, that means below the 0 line, you will take note of when price is below the equilibrium here in the red zone. And by combining these two, it is basically whether price is in a buy or a sell program, right? If you're below 0 line and this is below in the red zone, then you are like in a deep discount, you know, because this is already in a net short and this is in a netter short. Okay, there's no word for something that's bigger than net short, but you just, to make it simple, below the 0 line and is below the equilibrium of the 6 month look back, then you can be sure that the commercials are going short. So let me show you in the market right here. Just take a look at the data, align it, use this as a reference, this box here. Don't ignore all of this behind you, just use the box as a reference, alright? We see at the start, we actually began a downtrend. We are in a very steep downtrend, and then we see commercials buying up. Okay, we see price actually slowly trace back up into the green zone. Then, when we reach a pivoting point, we see commercials start to sell. And when commercials sell, we tend to see price rally. Because as we know, banks sell when price is going up and banks buy when price is going down. They do not trade the trends like us. We sell when the trend is going down and we buy when the trend is going up. But banks do the opposite of that. And we can see from this commercial data here, we can see that the gradient is a positive gradient. That means it's increasing, right? We know that the COT is increasing here. And this coincides with these short positions here that pushes the price down. Right? And then we see a pivoting point. It's basically like an inverse relation to it. So we use all these crosses, these areas here, these crosses, to determine pivoting points as well. So as you can see that cross 1 over here, we see actually price start to slow down momentum, and a few days later, we see a reversal in the price. Again over here, we see a start drop down. That's why it's this random drop down here, and then again, when it crosses into the equilibrium zone, we see price rally back up. And again, when it crosses again, we see price going back down. So each cross at this equilibrium zone here, drawn on this chart, which is taken from the highest and the lowest point of the 6-month look back, is a pivoting point. Alright, Aussie New Zealand dollar just triggered my alert, so we're going to take a look at that in a while. But this is essentially how you use the COT to view what price is doing and what are the possible things that price may do when it reaches a specific point in the COT data, which is this equilibrium point. We can expect a form of reversal, and that's when we have to know when to stay out of the markets, right? So 2 takeaways from this is that commercials trade the opposite of what price is doing now, and secondly, that every single cross of equilibrium is a pivoting point in price. Alright, this is not a lagging indicator. This is not like your RSI. This is a leading indicator that I use and I've been using for a while. And it works almost just like the IPDA data arrays, the IPDA price delivery interbank price delivery algorithm that I told you guys about. I'll make sure to have another lesson on this. I know it can be very overwhelming for me to just throw it all at you right now. I will definitely go and structure the lesson properly before teaching it to you again. So this is like kind of a starter lesson, you know, you get a taste of it and then you try to figure it out yourself. Prepare any questions you may want to ask me. Then I will do a proper live lesson on this because I do need time to prepare all the different content and think of questions that students might want to ask me as well. Yeah, you can definitely take a look back at backtest. There are still a lot of things that I have not told you about the COT data yet. Because the COT data tells you is a treasure chest of information, and a lot of people tend to look past this data. So maybe by you looking back at what the data has presented to you, you might even find the secrets for yourself without me even explaining it to you. And that's the beauty of backtesting, right? So I'm gonna talk to my team about this, and then we'll probably have a nice little slideshow. Yeah, ICT's playlist is a bit confusing because he tends to go round and round about when he's teaching, right? It can get a little bit frustrating. So I've gone through hundreds of hours of his playlist, and I believe I can explain it slightly better. I may not have the same amount of knowledge as him because he's ICT after all. He created this entire thing. But I can try to summarize what his videos are trying to say, and I'll put it into the charts as well for you guys. Alright, so it is settled. For the next live lesson, we'll be talking about the commitment of traders data. And yeah, I will teach you guys how to use it for your regular trading as well. So be sure to tune in next Wednesday when I'll be teaching that. Hello Xing Qian, welcome to the chat. How are you, bro? Yeah, I guess all grades are like that. It's really weird, but you know, they probably spend so many years studying their concepts that maybe that's why they lost their minds in the first place. Still really slow markets for today. On the Euro USD, I still have not seen any violation of previous session highs. So let's turn on the session highs indicator. Oh no, I don't have it here. Let me do this. Okay, we violated the AM session high, but we've still yet to violate this high over here, so that's a big concern for me. On the 15-minute, we saw this fair value gap being filled and pushing to the upside. So that tells me that we're going to refill this area here, and then that's about it. I'm not going to look for longs because it's way too dangerous. There's no real entry point here. You can see that it's like a trend line, and I don't really like to enter trend lines. I like to enter impulse moves. Things like this, see? Impulse move. It just shot all the way up. There's no like pull back and then pump, pull back and pump. It's just one straight line up. So clean. That's the type of setup I'm looking for. But if I don't get an entry by 10:45 New York time, then I'm gonna have to end the stream because there's really nothing else to look for and kill zone hours are over. If I want to look for longs, I'll probably just randomly long here, but you know, that goes against my personal model and I don't really like that to happen. Any other questions or concepts that you might want me to explain? And then maybe I can schedule a weekly live lesson as well, covering the different concepts, but of course I have to prepare the materials as well. Oh, we might have something here. This might be a good rejection. Oh, ew. It's a huge dump though, that's the thing. We might actually miss this move. It might come in the New York PM session. But as I'm sleeping, I won't be able to monitor it, and I don't really like to have positions open when I'm asleep. Yeah, so gonna give that a miss. Gonna hope this one hits the final target. Gotta go home with some profits. Look at this. If I tried to trade this inversion fair value gap, I was just gonna stop out here and there. There's no point. It's too choppy to trade right now. Yeah, it's a really boring. It's one of the most boring price action I've seen in a while. Let me check the New Zealand dollar again, yeah? Reacted off this fair value gap. It's rather clean actually. But I want to see another fair value gap form, and then I'll take entry off of it. But right now it's nothing much. Because I want a confirmation, right? Because price has been chopping around, there's a lot of liquidity built up. It can go both directions. So getting a second leg displacement gives me that confirmation that price wants to go lower to outdraw on liquidity. And if I do get that second leg lower, then I can be sure that this will be the high of the session. And then my stops can be much lower. So this is a 10 pip stop. What I could potentially get on a short position in a displacement leg could be a 6 pip, 7 pip stop. Which if you're playing a 1 to 2, that means you are targeting 12 pips lesser, which is a lot of price movement, especially considering these are random Australian pairs. So I need a fair value gap to form, man. Give me something, give me a breakout. Without a breakout, I can't take a trade. Yeah, I don't think a breakout is gonna form. Wonder how it's like on the 1 minute though. Oh, that is ugly. That is ugly. So the lowest I'll ever go is the 5 minute unless I'm doing the inversion FEG model. Otherwise I'm gonna stay over here. The thing about the Aussie is that it's probably gonna be the most volatile in the morning. So be sure to join our Discord because I'm always awake in the morning observing the Asian session, and I will trade the Asian session if price presents an opportunity for itself. Because for the Aussie New Zealand dollar and those are in the Australian continent, right? And the time is really similar to that of Tokyo. So that's why we see more volatility going into the Asian session as compared to the New York session. You see, from the midnight open all the way until New York, then it starts chopping around because during the London session and the Asian session is when we see the most volatility here. Seems like price is dumping. Might get something here. Just give me a nice little fair value gap close, and then yeah, because as you can see here, right, the thing about this minor pairs is that most fair value gaps get respected like really well because of the lack of liquidity in the market. Even though the spreads are like quite okay, 2.3, you can actually see that the market is respecting the fair value gaps pretty well. You can see some form of initial rejection before going even higher at almost every single PD array. So you are able to still secure some form of profits before you get stopped out at break even or complete stop loss because of how well the price respects the fair value gaps here. So if you are a lower time frame trader, you will probably find a lot of good trades just by trading this fair value gaps here. So again, I'm gonna give you guys a setup. I won't be able to monitor it. Alright, this Aussie Japanese yen has already shot off. We're about to hit our target. Probably won't retrace. But for the Aussie New Zealand dollar, this is the setup you want to look for. You want to see a 15-minute fair value gap form, and then you retrace into it, or a 5-minute fair value gap form, retrace into it, and then dump. Right, this is considered something called the second leg entry. You can mark it up for yourself. If you guys get profits, good for you, but I will not be participating in the trade because I have to sleep. Alright, I don't like to have trades open when I sleep, but this is the setup that I'm giving you guys. If you guys hit take profit, join our Discord, post your wins, alright? I'll be talking about this trade in my private signals as well. See, the price is currently undergoing a meltdown. So if this fair value gap stays here, I'm gonna use this fair value gap. Just gonna delete this arrows here. So we got 5 minutes to the close, which is the timing before this old low here that may coincide with the fair value gap. So if we place an entry here, then we might be able to get this kind of entry for 5 pips stops, which is pretty decent. Aim for a nice 1 to 2, 10 pips, which is honestly not that much. On the higher time frame, we are actually targeting this low over here. So if you want to hold all the way with a 5 pip stop, you technically can do that as well. So ultimately, I want to see a fair value gap from here, and then I'm going to short off of this immediately. Possibly a market entry, and then we'll let it run all the way. Alright, so we'll check back in about 3 minutes. Gonna check some of my Discord stuff. Hello Javier, welcome to the channel. How are you doing? Glad you're able to join us today for the stream. Thanks, man. Appreciate it. It's a really slow day because it's Valentine's. Like I said, the market makers probably went for Valentine's dates. That's why the market is so dead, bro. There's barely any movement. What am I supposed to do with all these wicks here? Jeez. Is it balanced? It seems like one side is bigger than the other. Alright. Yeah, it seems like there's no entry. Price is just pumping up again. I'm gonna give this trade a miss because there's so many wicks down here. For swing traders, however, I can probably... Nah, I think it's too dangerous. If there's no imbalance form, then it's way too dangerous to trade this pass. We might see something of going into Asian session tomorrow, I don't know, but I'm gonna update the Discord in my analysis channel, so if you're not in it, be sure to join it. I will try to update as much as I can. Just you can actually take a look at my trade history. I actually do a lot of accurate updates, and hopefully that can value add to your own trading experience as well. So, what do you guys prefer? Do you guys prefer live trading sessions, or do you prefer live lessons for free and then you guys get to ask me questions and I answer them for you based on my experience and knowledge? Which is better for you guys? Just let me know in the chat, please. Alright, so the time now is about 10:45. We didn't really get a trade because honestly nothing is moving in the market. Even for the minor pairs as well, we've seen some crazy consolidation here. Alright, so that brings us to the end of the trading session with no trades taken. Hopefully, going into tomorrow, we might see more price action. And I'll be calling out every single one of my trades in the Discord as well. So I look forward to seeing you guys there, and thank you guys for joining to the stream today. And I'll see you guys next time.